Welcome to Markets Now. I'm Michelle Rourke with Matt Bennett, agmarket.net. We closed higher in cattle and soybeans. Everything else was mixed to lower. And let's start off talking about soybeans, Matt, because soybeans look like they got a push here from maybe some easing of these trade tensions with China.
Yeah, I mean, it seems like that's softening a little bit. There's talk that President Trump's going to sit down and talk. I mean, they made plans to sit down and talk with Xi in China. There's a lot of pressure being put on the president right now. I believe some people are saying, hey, within the next 2 or 3 weeks, we could see some issues as far as some shelves being empty, and there's a lot of pressure out there for there to be some sort of positive momentum go on. I think there's a lot of folks that know that, yes, we need to get some of these trade imbalances addressed. There's a lot of experts out there trying to figure out what the right or wrong way to do it is. I can tell you, Michelle, I'm glad that I'm not sitting in that camp because, I don't think that it's a one size fits all type approach. But by all means, some of this talk with China and the U.S. sitting down and coming up with some sort of a resolution is certainly going to be positive towards soybeans. We know how many beans they buy. Clearly, easily the number one purchaser of beans in the world.
Yeah, right now they're buying from Brazil, though, yet we still see the bull spreads in effect. And so we still have demand coming at the bean market, don't we?
Yeah, we do. We're actually picking up business. I mean, there's a lot of folks that 2 months ago said we were going to see net cancellations on the weekly moving forward, and that just hasn't happened, quite frankly. I mean, inspections were good again this past week. Last week's export sales were awful good, and so bottom line is you still got, in my opinion, a story there where the balance sheet isn't going to get too robust. It's not going to be anywhere what we thought it was going to be previously. And then you start looking at new crop balance sheet. To say that it's thin would be, a little bit of it certainly wouldn't be an exaggeration. And so it's going to be, maybe like a 250 type carry. I mean, a lot of it's going to depend on what's the USDA do with demand whenever we get into new crop for this May report. Bottom line is, though, Michelle, it's going to be tight.
It is, especially if we've got the lower acres as we've talked. So technically, funds are already long in the beans, and we got above the 200-day moving average, closed above it today. Do we keep going above the $11 mark?
Yeah, I mean, I would say that's certainly an objective. I mean, anybody that's got old beans around is, not a common person. We know that, ownership of both corn and beans is fairly low for the grower. But if I've got old beans sitting around, 11 might not be where I put my offer. I certainly think the market's going to try to take a stab at it. Maybe you're going to get the bulls anyway a little more interested in stepping in, being able to have a close like this here today. I've thought all along beans might follow corn more so than anything, And then if we get in a weather market this summer, which a lot of people are already talking, the dryness in the West could continue into the summer. I mean, hopefully we get a lot of moisture here with this system coming up. But regardless, if you get dry in the West this year, there's no doubt corn will be highly reactive. I always felt like soybeans would follow along with that, but beans seem to be standing on their own two legs right now, and I do think that more buying could be in order of this kind of close.
Well, the corn market went the opposite direction, fourth day down. And let's talk about corn. Is the pressure just coming from, fast planting and talk of higher acres?
I think that that's got a lot to do with it, Michelle. We know that demand's been awfully strong still. You look at these export numbers here lately, and inspections were good again this last week. Last week's sales were good again. Overall, whenever you look at corn, demand's strong. But bottom line is, whenever planters are rolling, it's really hard to look around and find buyers for this corn market. Now, whenever you look at the balance sheet, is it going to get even tighter yet? I think with the export sales we've seen, if you do some pace analysis, you could certainly make the case USDA is still too low as far as exports are concerned. So right now you're at a 1,465. You carry that into new crop. If it's 95.3 million acres that we plant, you still need a big yield. I mean, that's all there is to it. So yes, we could plant more than that. We know that, but there are some headwinds. There's some problems getting a hold of fertilizer. We know UAN and anhydrous in parts of the world. You can write them a check, but that doesn't mean you're going to get what you want. And so unfortunately, that could be a bit of a headwind, for some of these growers that like to put more corn acres in the ground. So I think the verdict's still out on that, whether we'll get more corn acres or not.
Corn and wheat, though, continue to kind of anchor each other. And the wheat market there, we've heard of some rains or some forecasted rains for parts of the HRW country. Does wheat go back down and take out these contract lows if that materializes, do you think?
That's a big question. In my opinion, you would think that that long term support would hold, but at the same time, wheat just has not been able to see the light of day for quite some time. They came out and said, Russia's wheat crop actually came out of dormancy and getting decent weather, maybe significantly better than what they thought. And so it's actually rated, I believe, 90% good to excellent. I mean, their wheat crop looks good right now, and certainly they're a bigger player whenever it comes to world export market than what we are. So, you look at their weather, you look at our weather. If this storm system does bless a lot of these folks with rain that's been sorely needed for a long time, then certainly you could make the case that we could go down and break those lows. But I'd sure like to see them hold.
So the pressure in either corn or wheat, is any of it coming from May option expiration coming up here Friday?
Oh, I think it's possible. Another thing, I mean, obviously it didn't affect soybeans, but the dollar, the dollar
Yeah.
raced back higher here today. And by all means, I mean, it's going to provide a bit of a headwind. It seems like it affects the wheat market as much as anything. So, I guess option expiration could have something to do with it. But at the same time, I don't feel like we've got quite as many May options traded historically as what we do March and July. But yes, we're hitting option expiration here this week, so it's certainly something to watch out for.
Beyond fundamentals, all the commodity sector has been influenced by this money flow. So right now, where do you see the managed money going? We saw that they added to their length in corn and soybeans, but does it stay there?
Yeah, I mean, here's my opinion on it. I don't see a lot of weather premium in this corn market right now. When you look at our major trade partners, or not partners, but people who are also exporting corn, so Ukraine, Argentina, and Brazil, coming into this year, I mean, you're looking at lows that I believe 18-year lows for their supplies in total. This Brazil crop looks to be rather large. They don't really have a whole lot in the way of weather problems, but we have to keep in mind they raise about a third of what we do. So, what is most important over the next 8 to 12 weeks? Does the U.S. have a good growing season in order? Are we going to be able to get through pollination in good shape? Is the Western Corn Belt going to heal up and you have weather conducive to a big crop? Because if that's the case, yes, there's going to be volatility to the downside. But if we don't, you could see extreme volatility to the upside. So, I do think the funds will actually want to own corn going into that. And as far as cattle go, I don't necessarily see them building an even bigger position in cattle. I don't really see them getting out of it right now either.
Cattle market, meantime, made new contract highs in the live cattle futures. Obviously, we've had strong cash, but the push of the stock market has certainly been helping us, hasn't it?
Yeah, no doubt about it. I mean, the stock market yesterday closed up 1,000, as you and I were talking here today. Half of that we're still higher again, so 1,500 over the course of a couple of days. That's a pretty big move. I mean, no doubt. Whenever you see buying in the equities, you see that you feel consumer confidence maybe is just a little bit better than maybe what you thought it was a couple days ago. That typically spills over into cattle. But as you mentioned, this has been a cash-led market all the way. I mean, the fundamentals of this cattle market are still friendly. I mean, it's really hard to sit here and say, hey, this is going to change quickly. We know it's not going to change quickly. It takes a long time to build a cattle herd. Numbers are not that great, and the consumer still seems to be willing to step out and buy a steak dinner on Friday night, and we all know that, what that costs. And so bottom line is, whether you're talking feeders or fats, numbers don't support, in my opinion, a huge pullback. But Michelle, I would still caution folks that have a fair amount of risk on the table. If you've got several pens of cattle still waiting there, we know they're feeding them to higher weights. You got a lot of money. I would still have some sort of protection under myself. I know you can do LRP. There's things you can do, but at least do something because there's no question that this is still a very fluid situation. If we came out tomorrow and said, hey, all talks are off with China, I think we all know what the indexes would do. I think equities would really struggle. If that's the case and some of these guys decide they need to find some money somewhere, they certainly have been long cattle for long enough at this point.
Yeah, the fund's still over 100,000
Yeah,
contracts long.
absolutely.
With the technical action that we saw today, do you think we're seeing a double top form, or is this the start of a next leg higher?
Yeah, I mean that to be honest, I don't know. I mean, that's a tough question. You've got to think that fundamentally you've got every reason to go on higher, but what's too high? 212. I mean, the 212, 213. These are prices that a lot of folks have been in the cattle business their whole life have dreamed of. There's no doubt. And so at some point, you've got to ask yourself if you're trying to look for the functionality, for some sort of a educated answer to that question. As a cattle producer, you don't want to get greedy. I mean, yes, you could see another leg higher, but if you set a floor in place under yourself at 206, 208, and then the market goes on higher, I don't think you're going to be super upset about it if you're selling your fast for 220 or two and a quarter. I mean, is that possible? Absolutely. I mean, we haven't been too far away from it at this point. So yeah, I would at least stay protected no matter what happens here. But no, I don't know the answer whether this is a double top or whether we're going on higher. I think you could make the case either way.
Thanks for your analysis. As always, Matt Bennett with agmarket.net. That is Markets Now.